Should you invest in a USD money market fund account in as much as you don't have any USD, you only have Kenyan shillings, or should you just invest in the KES money market fund account? You're going to answer this question with a calculation. And before that, what's a money market fund account? A money market fund account is an investment account that allows different people to put their money together in that one account. Then that money is going to be used by the fund manager, by an expert, by a professional to do other investments. Then once those other investments give them returns, they're going to share with you that interest or those returns in form of interest. So basically, they are using your money in the market to make more money. Then once they make that extra money, they share with you in form of interest. Think of it this way. Ivy, Gamma, James, Kemunto, all of them, they contribute their money together in one account. Then that money that is in one account is going to be used to make investments. One thing about money market funds is that that money is going to be invested in short-term investments. That money cannot just be used to invest in real estate. Okay, there are certain restrictions that the Capital Market Authority has, such that that money cannot just be used to invest in anything. It has to be invested in short-term instruments or in short-term investments like treasury bills. You're going to find that that money most of the time is used in investing treasury bills or investing in cash deposits with banks or fixed deposits with banks. So it's limited. It's not like they can use that money to invest in anything. That's why it's less risky, because the investments that are being used by that money are also less risky. Here's a list of money market funds here in Kenya that have or that are in dollars. We have Jubilee, we have CIC, we have N-Wealth, we have Etika, Absa, Dry Associates, I&M, NCBA. In this list that I compiled, not all of them are MMF. Some of them are fixed income funds. Fixed income funds are just like MMFs in terms of how they operate, where money is deposited in one account, then it's used to invest in the market and all that. The difference between a money market fund account and a fixed fund account is in terms of where is that money being invested? The money that you've saved up, the money that you are investing, what is it used or where is it being invested? For money market funds, that money is going to be invested in very short-term securities like treasury bills and also fixed deposits, something that investments that are going to be earning interest in less than a year. But a fixed income fund is just like an MMF, but this time the money is going to be used to invest in debt securities, like long-term debt securities like government bonds and corporate bonds, but not really long-term, like short-term corporate bonds. So for fixed income funds, the money is going to invest in bonds. It can be corporate bonds. Corporate bonds are debts that are being extended to businesses, big businesses, corporate businesses, or it can be treasury bonds, the ones that are issued by the government of Kenya. So in this list that I have shared, I've also included fixed income funds there because I noticed some of the products that these institutions have are not restricted to MMFs. They're also fixed income funds. So I included them there. You can see that there's a minimum investment amount for USD MMFs or fixed income funds. For CIC, you can see it's 1,000. For N-Wealth, it's 1,000 USD. This is in USD. Dry Associates, it's 10,000. I literally used this, I grabbed this information from their website. So you can see that the fee, there's also an annual fee that is charged on the service that they're offering you. Then there's an additional investment. An additional investment is the additional amount of money that you can top up to invest in. So for some it's 100, for some it's 500, for some it's 50 bob. So you have to check the one that you think you can invest in. Then there's the daily yield or the interest rate that's going to be used. I was not able to find for most of them. So that's something that you can check on in case you want to invest in one of these USD money market funds or fixed income funds. You can check that out. While I was researching this list, I noticed that the returns on USD money market funds are not as high as the ones in USD. For KES money market funds, you're going to find or you're going to come across interest rates like 12%, 13%, 18%, 16%. But for the USD money market fund, the one that I came across, the one that had like the highest one was around 7%. So most of them are going to play around between 3% to 7%. Yeah, the interest rate is low. Interest rate is low for USD, but it makes sense. Let's do a calculation where somebody only has Kenyan shillings, assuming that Ivy only has money in Kenyan shillings. Ivy has 100,000 Kenyan shillings, but she doesn't want to invest in a USD, in a KES money market fund account, but she wants to invest in a USD money market fund account. How will that look like? In this example, we are going to assume that Delta wants to invest 100,000 Kenyan shillings in a USD money market fund account that earns an interest of 5.59%. 5.59% is actually an interest rate for one of the USD money market funds here in Kenya. So it's a realistic figure. And she's going to leave this investment for 1 year. So she's going to lock in that money, or she's just going to invest, not touch that money for a whole year. How much will she make? We're going to be doing a little bit of Forex, but I'm going to be as simple as I can. You have 100,000 Kenyan shillings. You go to the bank. You want them to transfer money to USD, to a USD bank account. When you go to the bank, or when you're transferring money to a USD bank account, there are usually two rates, or rather there are two rates that you usually see in a bank, two exchange rates. The first one is the buying rate. The buying rate is the rate at which the bank is going to buy USD from you. Then we have the selling rate. The selling rate is the rate at which the bank is going to sell USD dollars to you. So here we have the buying rate as 126 shillings, and then we have the selling rate as 132.5 shillings. These are actual figures from one of the banks here in Kenya. So these numbers are realistic. So when you go to the bank, Delta goes to the bank with 100,000 Kenyan shillings, or Delta is trying to exchange money to USD. She's going to be sold USD. So the selling rate is going to be used to convert the money to USD. In this case, it's 132.5 currently as at 28th October 2024. So we're going to divide the 100,000 Kenyan shillings, divide by 132.5. Once we do that, we are going to come up with 754.71 USD. 754.71 is the USD that the bank is going to give her, or it's the money, it's the USD equivalent amount that is going to hit into the USD MMF. Okay, so in actual sense, she has invested 754.71 USD. Delta is going to invest $754.71 in a money market fund account that earns 5.59%. The 5.59% is a realistic figure that I've taken from one of the money market funds here in Kenya. She's going to leave that investment, or she's going to invest for a whole year, so she's not going to touch that money. At the end of the year, Delta is going to make 43.29. When you punch in these numbers in the money market fund calculator, Oyori money market fund calculator, where the investment is 754.71, interest rate is 5.59 for 1 year, compounding monthly, you're going to get that the interest that is going to be earned is 43.29. So 43.29 plus the initial amount, 754.71, it means Delta is supposed to have 798 USD dollars in her bank account. But because the interest that you earn has to be taxed, and the management also has to take away a fee, a small fee for investing on your behalf, they're going to take away, withholding tax is 15% of the interest, that is 43.29. So the total tax that is going to the Kenya Revenue Authority is going to be 6.49 USD. The management fee of 1%, which is a realistic figure that I've used from one of the MMFs, the USD MMFs. So 1% times the interest, that's going to be 43.29, or rather is going to be 0.4329. So Delta is supposed to have 798. But out of the 798, we have to take away the 6.49 withholding tax. Then you have to take away 0.43 USD. So Delta is going to have 791.0736 in her MMF account. Okay, this calculation is not entirely accurate because of the withholding tax. The tax is usually calculated on a monthly basis, but not on a yearly basis the way I did it. But it's going to be around that figure. So it's not that accurate, but it's going to be around that figure. So that's the return. That's the amount of money that she's going to have. Now, remember, Delta exchanged this money at a rate of 132.5. She literally bought the USD, right? So after a year, she now has 791.0736. This money has to be deposited back to her, but she doesn't have a USD bank account. So once that money is going to be deposited to her bank account, and her bank account is in Kenyan shillings, that money has to be automatically converted from USD to KES. Okay? So in this case, let's assume that this 791.0736 is going to be converted at 126 shillings. Why? Because Delta now has USD, and the bank is going to buy the USD from her so that she's given Kenyan shillings. And the buying rate is 126. So we have to multiply. So if 1 shilling, or rather if 1 USD is equals to 126 shillings, what about 791, 0.736 USD? What will it be in shillings? Okay. So here it's 791.07 times 126. So at the end of the day, this is just the assumption that the rate did not change. So Delta is going to have 99,675.2736. Have you noticed something? Delta has lost. Delta has lost because of the exchange rate. You see, Delta in the beginning, she had 100,000 Kenyan shillings. But now at the end of the year, she now has 99,675. She's actually gone at a loss. Delta has lost because the exchange rate has remained the same. The value of the dollar has remained the same in 1 year. If the value of the dollar had gone up, by that I mean 1 USD equals to more Kenyan shillings, so is equals to more than this 126 shillings. That means that the dollar currency has gone up and the Kenyan shilling has lost value, so it's going to have a larger value. If this 126 now becomes 132, or it becomes 130 or 135 or 140, if Delta is going to convert this USD amount to Kenyan shillings, she's going to have more Kenyan shillings. I don't know if that makes sense. This is the conclusion. If you don't have any USD amount, like you want to invest in a USD money market fund account, but you don't have any USD. You don't have a USD bank account. You don't have money in USD, but you want to invest there. You're going to lose because of the exchange rate. You're going to lose because of the exchange rate and also the transaction costs that are associated with transferring money to USD. But that's not like that much of a big deal, but you're going to lose because of the exchange rate. So it's advisable that if you have money in USD already, in dollars already, then invest in a dollar money market fund account. If you have money in Kenyan shillings already, invest in a Kenyan shillings money market fund account. Just to illustrate this, let's do another calculation where we're going to assume Delta did not invest in a dollar money market fund account. Delta used that 100,000 Kenyan shillings in investing in a KES, a Kenyan shillings money market fund account, and look at how much money she would be making. So we are going to type in, we're going to the money market fund, Oyori money market fund calculator, and then we're going to key in the principal. That is the initial amount of investment as 100,000 Kenyan shillings. The duration is going to be 1 year. I'm going to choose an interest rate of 12% because I feel like it's fair. I don't want to put even a high interest rate like 14% or 16% or so. Let me just choose 12%, like slightly lower, but just there in the middle. Then no additional contributions. Calculate. So if Delta invested that 100,000 Kenyan shillings in a money market fund account, in a KES money market fund account that gives 12% interest, she's going to make 12,682.5 shillings at the end of the year. Her final investment is going to be 100,000 Kenyan shillings plus 12,682.50. So she's going to have 112,682.50. This one is even more. You can see that this figure, 112,000 Kenyan shillings, is higher than the 99,000 Kenyan shillings that she made. In fact, she made a loss. One final thing that you're going to notice with USD money market funds or USD fixed income funds is that they usually have a lock-in period, but not all of them, like most of them. They're not like the Kenyan ones. If you try to compare the KES versus the USD, in that with KES, you can withdraw money anytime. But for some of the USD money market funds and Fixed income funds, for some of them, you're going to notice that they're giving you a 30-day lock-in period. For some of them, they're not going to allow you to withdraw money anytime. They're going to tell you after you deposit, at least lock it for 30 days. Don't touch the money for 30 days. Then you can withdraw. So I think that is something that is important. And I feel like if you're paid in USD, like if your salary here in Kenya, you have the privilege to be paid in USD, then investing in a USD money market fund account is going to be beneficial for you. Yeah, because you don't have to worry about the exchange rate thing. You already have the USD in your bank account. That's what I would advise anyone who is investing in a USD money market fund account, or anyone who gets money from abroad and the money gets to hit their bank account in USD. That's another recommendation. So in short, if you receive any money in USD, you're going to benefit from investing in USD money market funds and USD fixed income funds than if you are paid in local currency. I have written an ebook on investing in money market funds, and it has a wide vast of resources. It has calculations, it has explanations. It's a good book that you can buy for yourself, and you can also buy for a friend, buy for your brother, buy for your sister, buy for your wife, buy for anybody. Grab a copy at 500 shillings. I promise you, you're not going to regret buying this book. Thank you, and see you in the next video.